Before we go to level 11, let's call our final speaker of the day one here, Fefe Demeney, host at Crypto Banter and 100X Club. The stage is all yours. Welcome.
Thank you, guys. Thank you. Hi, everybody. My name is Fefe Demeney, and I'm here to share with you what's beyond Bitcoin and why and how Wall Street will be eaten alive. If I was a Wall Street employee, I would genuinely be concerned and scared. And not only because of AI, and not only because of the $37 trillion debt that will result in an inevitable complete meltdown, but because of blockchain technology. And because what blockchain technology is going to do to our financial system. And this is the reaction of any Wall Street guys. Blockchain won't replace me. And this is normal, absolutely normal, especially when something threatens your existence. We've seen this several times throughout history. For example, the horse is here to stay, but the automobile is only a novelty, a fad. President of Michigan Savings Bank to Henry Ford, 1903. Or, no online database will replace your daily newspaper. Clifford Stoll, Newsweek, 1995. Or, I don't know why you would want to use a stablecoin as opposed to payment. Jamie Dimon, 2025. Jamie Dimon is the CEO of one of the largest banks on the planet, JP Morgan. You probably have known this, but did you also know that JP Morgan employs 300,000 people globally? This is actually not the shock factor. The shock factor is that 75% of those people could be replaced by blockchain technology today. It wouldn't just run without employees, but it would also be cheaper, would also be faster, and it would also be much more transparent than any Wall Street company could ever be. Now, this is probably the point in the keynote when someone is watching this, they will say, okay, so you're one of those lunatic guys who believe there is only Bitcoin, and Bitcoin will kill us all and replace the financial system. And I actually could be. There is no second best. Hillary told us. And I agree with him. In my last keynote in Monaco, I shared my thoughts on why I believe Bitcoin is the most misunderstood revolution of our time and why there is just simply no second best. Bitcoin is coming from an unknown creator, and without any board members, any marketing budget, became the most decentralized network on the planet. But if anyone believes that Bitcoin will be able to compete with Wall Street, they confuse the revolution of money with the revolution of finance. With 7 transactions per second, 4 megabyte block sizes, 60-minute long settlement times, and relatively high fees, Bitcoin will never be able to compete with Wall Street. But there are many protocols today that are not only able to compete with Wall Street, but are able to eat Wall Street alive. But what does Wall Street do anyway? There are 6 pillars that I think is worth noting. Trading and market making, custody and clearing, credit and lending, capital raising, asset and wealth management, risk management, and derivatives. And I want to start talking about the first 2 because I think they are very relevant. Trading, market making, custody, and clearing. Now, I want to show you the journey of a trade on Wall Street in the 1970s. This is how it looked like. As a comparison, I want to show you the trade of a journey on Wall Street in 2025, today. This is what it looks like. If you're looking for the differences, don't, because there are no differences. The reason is because in the past 50 years, there has been no major upgrades to the process which trades travel on Wall Street. Someone initiates a trade. Today, you do this in your mobile application, and it pops up, and the trade is executed. But what you don't see is that under the hood, the same process that's been taking place since 1970s is still happening. After the initiation of the trade goes to execution. Usually it goes to an exchange, but about 50% of the time it actually goes to hidden venues and it goes to unseen avenues. And then once that's done, it goes to clearing houses. They guarantee the settlement, whatever that means in today's world. Then it goes to custodians, who record it on their private ledger, and they make sure that the beneficiary owners are updated and kept record of. And then, one business day later, the trade settles. Now that means that even though you see it pop up on your screen, if you initiate a trade on Friday, that will only settle on Monday. The same process would look like this on-chain. Connect a wallet, initiate a trade, and execute a trade, which you don't even have to do because the smart contract does it for you. It's instant, it's fully transparent, no brokers, no dark pools, no clearing houses, no custodians, yet it is more transparent and reliable than Wall Street will ever be. Now, if this is the case, you might be wondering, why on earth does Wall Street still have these processes? And the answer is simpler than you might think. Wall Street was built in the 20th century to solve 20th century problems. Paper stock certificates, counterparty risk, and trust in the middleman. And each step, brokers, market makers, clearing houses, custodians, was added to combat these 20th century problems. But I want you to make no mistake. These processes today, when trillions of dollars move through Wall Street every day, don't exist because they are efficient. They exist because they are profitable for Wall Street. But it's not just trading that is complicated. We can also look at credit and lending. This is the actual process of getting a loan on Wall Street today. Now, it's even difficult to read, let alone go actually through with it. It would take you about weeks to months. It would cost you about 1% to 2% arrangement fees. For people who don't know that, it's just basically a fee you pay, so they help you go through all this. And then once you get there and you end up getting a loan, you can take it on 8 to 20% APR, depending on who you know, how you negotiate, depending on what size you want. Again, the same process in DeFi would look like this. Connect a wallet, lock collateral, borrow instantly. It's instant, it's transparent, it's cheap, and it's fair. The only upfront cost you have is basically the network fee, which is pennies. And you're getting a loan to 1 to 8% APR instead of the 8 to 20%, purely based on supply and demand, nothing else. And talking about supply and demand, I'm not going to go through the whole list, but I want to mention one more, which is capital raising. So you might think this is a simple equation. They connect people who have money with people who need money, but it's not that simple in Wall Street. If a company wants to raise money, they must hire an investment bank. They're going to do all the paperwork, file endless paperwork, do all the processes, hire lawyers, and it would take them between 6 to 18 months to actually list shares. This is not the bad part. The bad part is that they are the real cabal. It's not only that they give shares to their own friends that can make massive amounts of profit before the public even gets a chance to get in, but also they charge 5 to 7% in fees on the raised amount. And just to show you how severe this is, I brought you an example, Figma. Figma is a software design company that had their IPO this year, July. The IPO price was $33. Started trading at $85, and they closed the day at $115. That means that the institutional investors, or the cabal, made 3x just before the public who wanted to invest in the company's vision even could. So they could top blast it and get dumped on just a week later. But don't worry, because the people who made it all happen, the investment bankers, netted $60 million in the process, only on fees. So then I could tell you that raising capital in DeFi is simple, but I don't want to, because there is no point in explaining the obvious. And if you paid attention, by this time of the keynote, you probably understand that blockchain will revolutionize everything we know about finance today. But I started my keynote saying that if I was a Wall Street employee, I would be concerned, and I brought you some numbers, which I think are super important. About 40% of Wall Street workforce is in trading, market making, custody, and clearing. Credit and lending, another 20%, and at least 15% back offices, pushing paper from right to left. That adds up to about 75% of Wall Street's workforce that is replaceable by blockchain today. No employees, faster, cheaper, more reliable, more transparent. So I see two outcomes for this guy, and none of it actually serves him. One is banks adopt blockchain technology, they realize the potential, and the obvious way to go about this is to cut their own workforce by 75% to increase their margin. Or they don't adopt, they don't realize the potential, and become completely obsolete. And I understand. There are challenges, multiple challenges. The legal framework might not be ready now for a change like this, and the tech might not be there now. But so was the same case with the cars or the internet. If I told you 15 years ago that there was going to be a self-driving car communicating on the internet, driving on the roads of Texas, you would have said I was crazy 15 years ago. Today, that's reality. I also want you to think about that it's not just about the better tech. It's about a revolution. It's about a revolution on how we think about money, how we think about ownership, how we think about freedom. People had enough of paying 5 to 7% fees so insiders can triple their bags and dump on retail who want to support the company's vision. I personally had enough of paying $30 wire transfer fees that take 3 days. And I think we all had enough of corporations telling us to trust us when the same corporations go bankrupt every decade and ask for a bailout, which, by the way, happens from taxpayer money. Revolutions don't start when people are suffering. Revolutions start when people realize that they are being played and they realize that there is a better system, and that's where we are today. In 2008, Bitcoin started the revolution of money. It showed the world that money could indeed be decentralized. We don't need governments, we don't need banks, we don't need any intermediaries. And because of that, Bitcoin is on its way to becoming the most valuable asset on the planet. No doubt, we don't have to worry about Bitcoin. But I do believe that we're entering the next phase. We've got work to do. The phase beyond Bitcoin. We freed money, and now it's time to free finance. And as for Wall Street, history doesn't repeat, but it often rhymes. The horse lost to the car. The newspaper lost to the internet. And Wall Street will lose to blockchain technology. Now, you might not be able to see it now, but the revolution has started. It is in people's minds. And it might be impossible to imagine, might be impossible to understand now, but I want to leave you with one thought. Decades from now, nobody will be asking why Wall Street did not survive. They will be asking why anyone ever thought they could. Appreciate your time. Thank you so much.